One of the things, so I'm going to stop sharing, but
Okay.
one of the things to I wanted to go through is what are things that people should look out for when working with lenders, and how do you compare one rate versus another rate?
That's a good question. Actually, there is something that is required by law. It's called Reg Z. Anytime a lender quotes an interest rate, they have to quote an APR.
Mm-hmm.
And so an APR is an annual percentage rate. It's not the effective rate you're being charged interest at, but it is the cost of that loan to originate it. So in your particular case, I believe that interest rate was 3.625, and I believe your APR was.
Let me pull it back up.
Okay.
Okay. Let me pull that information back up.
That's the easiest way to tell how much money the lender is getting in comparing this.
Okay,
loan.
so this is the APR right here.
Yes, so your APR was 3.732. Your interest rate was actually a 3.625.
That is correct.
So your APR is very close. If you were looking at a loan between lender and lender, and they're quoting you same interest rate, and the APR would be at 4%, you know there'd be a lot of points involved, or there's a lot of fees that lender is getting. Otherwise, your APR should be very close to your interest rate.
Okay, should be. So that's a great way to, like, if the interest rates are the same, that's a way of comparing. Look at the APR to determine how much fees are going to charge.
Yes, that's correct.
Okay, so that's a really good tip for comparing, like, because it's very difficult to know what they're going to charge in fees until after you're, like, locked in with them.
Well, that's why you ask them what the APR is. And if the interest rate, because it's hard for the first-time home buyer or anybody really to know how much is this lender really charging me. So if they look at the APR and that's very close to what their interest rate is, there's very little fees involved in that transaction.
One thing you also mentioned to me that I was hoping you'd talk about is, like, a hot tip was ask for, like, a 30-day rate or something. I remember you talked to me last time.
Yeah. What you want is, let's say you're looking at purchasing a new construction, and that home won't be complete for 90 days.
Okay.
And as a consumer, you're trying to shop 3 different lenders, and you're really wanting to get rates on the same day, because rates can change on a daily basis.
Yeah.
So if you are shopping around, you want to call somebody, do not tell them that your house won't be ready for 90 days and what is your today's rate. So if you say, look, I'm thinking of locking in a rate today, I'd like a 30-day rate. Can you tell me what your rate is today? And can I lock it? If they're not willing to guarantee what they tell you, then they're probably lowballing it. And when you call back the next day, they're going to tell you, oh, sorry, rates have changed and now they're this.
Okay, so that's a great way to, like, because I think I remember you mentioning, like, if you're just telling them that they're asking for a rate, and if you don't have to ask for a 30-day rate, then they can just say any number. They could say just the lowest number they've ever had.
Today's 3%. Okay, well, because they know you're not going to make them commit to that because your house isn't complete.
Exactly. Okay.
So I just tell people when they're shopping to ask them, what's today's rate for 30-day? I need a 30-day price, and I'm thinking of locking. And then they're going to be a lot more honest because they know they may have to guarantee that rate. Okay.
One of the other things that you kind of talked about is, like, sometimes I have clients ask me about, like, about points, and then should I buy points? And what's your thoughts on that?
It really depends on how long you plan to be in the house, and how long you plan to hold that property, and are you planning to be in it for a long period of time. What I typically do is take the cost of the points, and I take the difference between the rate of buying that points down. Let's say they're going to pay $650 to buy that rate down. And the difference in that rate is, say, $34. Well, it may take them 75 months to recoup that.
Okay.
If they're only planning to be in that house for 5 years, that's 60 months. It's not a good
deal.
It's not a good deal for them to buy that rate down. They'll never recoup it. You know, we usually like to run the difference. I don't ever like to see more than more than a point on something. I wouldn't buy it down for more than that. It's just because most people move, the average person moves 5 to 7 years. And a lot of times it takes too long to recoup that money. So you've paid it up front and that's cost out of pocket now. And the payment difference, the spread between what the payment could have been and what it is, takes too long to recoup.
I see. So if you're moving in 5 to 7 years, you have a window of like maybe 60 to 72 months to like recoup that money. So if the point is too much, it may not be worth it.
Yeah, and what you want is a savings benefit. So if you're buying it down and you're going to recoup it in 36 months, and you know you're probably going to be there 60, that's a savings for you.
Yeah.
I mean, it makes sense at that point.
Yeah, it's a numbers game, and so you gotta add the numbers and see if it's worth it.
Yeah.
One of the other things you talked about when, like, I think you talked to me previously about comparing rates is you should ask for a par rate when comparing lenders, because some lenders will give you different like interest rate percentages, but it's hard to compare them.
Yes, absolutely. I had someone the other day who said, "Oh no, we don't have a rate unless you buy it down. So we charge 1 point." And this was just yesterday. I was talking to a friend that came over and asked me about their current lender was charging them a point, and their rate was what we would normally see as a par rate. And I said, well, you need to ask them why they're charging you a point. Are there any other, is it discount to buy the rate down? And if not, what does that point cover? Does it cover, underwriting fees, processing fees, things like that? If it's all inclusive and it's 1 point and there's no other fees involved for that transaction, then that's not a bad deal. Okay. But if it's, oh, well, we just always charge an origination fee. Well, I would shop somewhere else because we don't typically charge an origination fee, here where I am. That's okay.
So your policy, you don't necessarily charge points. You just charge like whatever the underwriting fee is, and you list out the exact reasons for each of them.
Exactly. Here at my company, we have 2 fees only: an underwriting fee and a processing fee. Mm-hmm. And then any points are bona fide where you're actually buying the rate down.
I see. So for your company, when someone's paying for a point, they're buying the rate down. Like the interest rate will be lower. Okay, but with some companies, they don't charge the underwriting and the other fee. They just charge
processing,
all
and underwriting.
Yeah, processing and underwriting. They just do a points, and that's it.
That's correct.
But if you're doing both, then you really should go. If somebody's charging you for points and underwriting, and they're not lowering the interest rate, then you should definitely go somewhere else.
Absolutely.
Because they're overcharging. Okay.
That's correct.
Okay.